Hi, everybody. I'm the moderator. I'm Drew Fagan. As I say, I was a Deputy Minister of Infrastructure and other stuff at Ontario, and now I'm not, which is even better, actually. I'll introduce the panel very quickly, and we're going to give each of them about 4 or 5 minutes to outline their views on the topics at hand, given their own experience, which is, in every case, wide-ranging. But I just want to bounce off what we were talking about. First, thank Jessica and Madeline, obviously. It's great, but there aren't enough opportunities to discuss these issues and to bring people together, including people across borders. But, we were talking about capital planning and things like that. The federal government has pledged by 2030 to eliminate the infrastructure deficit between Inuit, Nunavut, and the rest of Canada. The challenge with that, when we think about long-term planning, is nobody really has an assessment of how big that deficit is. How big is the gap between north and south? What are the challenges? And you can see them day to day. And I'm spending some time in the north. Broadband, economic infrastructure, social infrastructure, water and wastewater, diesel, they're manifest. And yet the pledge has been made, but it's very difficult to analyze how big an initiative would be necessary to actually close that gap. And if it's to be closed, it's certainly not going to be closed solely through government expenditures. As important as the last conversation it was with regard to when a CIB makes sense as a new innovation in our financing and when classical government spending or something in between like P3s makes most sense. So all 4 of the people on the panel have long experience in the Arctic and infrastructure and Indigenous communities, so I'm going to turn to them. I'm going to start with Max, who's Director of Research and Government Relations for the Canadian Council for Aboriginal Business. On the pre-call, we were talking about some of the research you guys are doing, including in an international context. So why don't you take 4 or 5 minutes to talk about that, and then I'll introduce the others.
Great. Well, thanks for the introduction, and it's a real honor to be here, and thank you guys for having me. And it's a great honor to be speaking with some of the folks like Keith and John on the panel. So I run the Research and Government Relations Department for the Canadian Council for Aboriginal Business. We have over almost 1,000 Indigenous companies, or 1,000 companies in our membership, over 60% of them being Indigenous. I know I've met a number of you folks here in the room, in the Yukon, notably, doing interviews or doing discussions around what the capacity and what the ability in those businesses are. And I think that when we talk about these discussions, and we're talking about fairly large numbers in terms of infrastructure projects, folks don't talk as often as I think they should about the capacity Indigenous companies have to fulfill those contracts and do those projects themselves, and not necessarily in a JV sense, in an actual primary contractor, primary vendor sense. So a lot of the work we do is we go around the country. We know anecdotally that is something that exists, is that Indigenous capacity, but without the actual hard data to demonstrate it, you really have a hard time proving that out in places like Ottawa and the Ottawa bubble, where many folks are really legitimately interested in how do you figure out how to do these co-governance things? How do you figure out how to move the needle on this? But if you don't have data, it's very difficult to get anything through finance. So we have the largest list of Indigenous privately owned businesses in the country, with over 10,000 firms on our list. So we do sort of surveys and focus groups with those companies. We also have one of the largest lists, if not the largest list, of DevCorps, community-owned companies in the country, and we survey them. I know it's very important to have a very clear understanding of the capacity of both of those different groups. We recently completed some work nationally where we visited over 104 First Nations, Inuit, and Métis communities in person, talking about the capacity, the infrastructure needs. 2 of the many things we talked about vision, we talked about governance. One of the key things, some of the key takeaways were what is the existing capacity to do projects within supply chains or directly, and also what are some of the main infrastructure needs. So we have a bunch of stuff around that I'm going to pepper into my conversation in the next little while, but one of the big takeaways is that there is no lack of companies that are looking for 10 to 50 million, 50 to 100 million, and 100 million plus projects. That's the amount of financing they're looking for, the size of business they've done in the last year. I spoke personally to dozens of these businesses, so I'm just, I guess, trying to make the point that they exist. We oversampled the north of the territories just to make sure that, it's because that's very important. And so I guess my whole point here is just we need to be very focused on how to actually ensure that in any of these business models or financing models we create, Indigenous companies have a direct route and access and seat at the table in these discussions.
Excellent. Thanks, Max. I'm going to turn to John Casola, who's Chief Investment Officer at the CIB, the Canada Infrastructure Bank, which you've heard referenced a few times. The bank is 2.5 years old since the legislation started. John's been there a year, and they have a number of projects on the book. The question was asked earlier whether they're moving fast enough. You look at the fiscal profile at finance, you actually are. You know, this is what the expectation was. But there was also, going back to the original intent, a desire to focus on Indigenous communities and operations in the North, and that was highlighted by the Minister. So over to you.
Thank you. It's a pleasure to be here. Thank you so much for inviting me. One of the very important parts of what we're doing at the bank is to get in rooms with people like you, influencers, who could carry the message of what it is we're doing. I think we need to do a better job at explaining who we are, what we do, and how we can be helpful. So hopefully this is a step in the right direction today. And thank you, Scott Northey, for understanding when you said we think we are on the right track. And I often hear they're not getting money out the door fast enough. You know, nothing makes my blood boil more than hundreds of shovel-ready projects. Where are they? I'd like to see those projects. Let me start by just clarifying what we do and who we are. We are a federal crown corporation created by the federal government about 2.5 years ago in legislation. We've actually been operational for about a year and a quarter, honestly, and staffed up. And in that year and a quarter, we really were a startup and continue to be a startup, as I like to say, a very well-funded startup, but a startup nonetheless. Developing policies, investment frameworks. We're governed by an independent board of directors. Hired up a team, and in that year we have 8 announcements on either funding commitments, advisory engagements, working with various groups on various projects across the country. So in my mind, not a bad start, but so much more we can do. And we're very, very excited about activity in the North and working in the North. We're being very strongly encouraged by the federal government, who's our shareholder, to focus on Northern Indigenous projects, but in the parameters of what we do. And let me just explain what it is we were created to do. It's actually quite specific, and I wasn't in the room when they decided what they were going to do with us and what they wanted us to do. Actually, Drew, you might have been.
Yeah.
But
I was around it, the first circle around it. Yeah.
But here's who we are. We have $35 billion allocated to us out of the government's $180 for infrastructure to invest in projects that fall in 4 main asset classes. Those projects need to be in one of public transit, trade and transport, which can be rail, roads, ports, green, which can be transmission, interties, water, wastewater, and as I like to say, I like to say this every time I talk about green, but in this audience it's even more important. The further north you go, green becomes greener. Very big emphasis on off diesel. So that is a key priority for us. And then the fourth was added in the March 19 budget, broadband. Government's made a pledge to connect every Canadian to high-speed internet as defined by the CRTC by 2030, and we're working very hard and looking at a number of projects across the North that aim to do that. Those projects, though, need to have commercial money, private sector money in the deal. Our mandate is to crowd in private sector capital, so to use our money to leverage private sector capital in the deal. So essentially, if you remember one thing about describing what we do and how we do it, think of us as a gap filler. The deal has to have some gap in the commercial structure that doesn't allow us to get done. That's where we come in. If it's financeable in the private sector, we don't play. There must be some problem with reaching a market return, or with a ramp-up period, or with some risks that private sector lenders or equity providers won't take, but we will. We're patient, flexible capital. We don't need to see We don't need to see our capital repaid within a certain number of years. Really important to know neither the organization nor the individuals in the organization are measured by how much money we make or returns. So we provide loans anywhere from 1% over 30 years to market rates, depending on what the gap is that we're seeking to fill. So our first level of analysis is to look at the deal, look at the transaction, think about how creative we can be, and try and figure out what's the right structure. And the great news is that we have a fairly blank slate, a fairly blank canvas in how we can do. We can be extremely creative in doing that. And so that's when we roll up our sleeves and we work with people like the government's supporting Tulsan, where we have an advisory mandate with them, and we're working very hard with them to try and get that project to market. It's a bit of a haul. There's lots of work to do, but all large, complex projects have lots of work to do. So we're ready to roll up our sleeves. We have the resources and the ability to do all of it, and the experience to do all of that. And that's the kind of project that we will look at. I'll stop there because I can go on forever, and I'm sure more of this will come out in the questions.
And importantly as well, you're looking for a specialist for your team in Indigenous infrastructure, right?
Correct. Correct. That's one of the yeah. I mean, we're putting our money where our mouth is. Essentially, it's been advertised on our website for a little while. We think we understand the complexities of the North and the relationships that are required, and we think that it's a very good and valuable investment to invest in one or two people that can really focus on a business plan and getting that done. So surfacing those projects and actually bringing them to the investments team or working with the investments team to move those along faster than would ordinarily be the case.
So anybody who's got a bio, send it your way.
Look at our website. Yeah.
Keith Martell is President and CEO of the First Nations Bank of Canada. Nice to have you here. I know you were just up on the stage, but you're also involved, I think, in the newly created Alberta Indigenous Organization Corp that the new Premier Kenny, set up. So maybe you can talk about the bank in terms of its operations over time, more long-lived, obviously, than the CIB, and maybe the fledgling organization, how all that fits together.
Sure, I'm happy to do that. So I'm not going to repeat stuff I said earlier, so some of that I'll take as a given. But so our bank is primarily a commercial bank. About 75% of our loan volume is commercial. 90% of that would be to Indigenous groups, including First Nations, Métis, and Inuit organizations, and we're 83% owned by Indigenous organizations, with our largest shareholder being an Inuit, Arctic360 Corporation from Nunavut. James Bay Cree are very large shareholders. First Nations in Saskatchewan are very large shareholders. 7 shareholders from Yukon, I can't forget them because they're in the room, own about 10% of the bank, including Carcross Tagish. So our focus as a bank is commercial lending, but because we are in those communities, because we're involved in those communities, a lot of times we're actually pointing our customers and our shareholders and our regional stakeholders in the right direction more than we're actually lending to their projects, specifically around infrastructure. So if an infrastructure for a First Nation is development of a clinic, a medical clinic, and the federal government has stretched out the funding of that clinic over 5 years, 7 years, instead of paying for it up front, that may be a commercial lending opportunity. But when it gets into buying or building their percentage ownership of a transmission line, we more often than not work with, Scott Northey, when he was at TD, worked with other banks to try and make it a structured debt facility that fits the parameters of those investment opportunities, or frankly pointing the right direction, like pointing the right project towards the infrastructure bank. That would be really important, because we're not just there to try and pull everything into a commercial loan, because we're there really for the long-term interest of the Indigenous group. So that's on the bank side, and that's sort of what we do and how we do it. Often we end up maybe not even financing some of the projects we work with advising. We are there to sort of facilitate and to match make, and then we don't end up doing any of the financing. We'll have other insurance companies or other structured debt for it. So that's what we do. We're looking forward to pushing some projects your direction.
You're more than welcome.
When you hire that person, let us know who they are.
You don't have to wait for that. You can start right now.
Okay,
we're available.
So that's what I do. I guess I'm wearing 2 hats, because I was on the Ministerial Advisory Committee on the formation of the Alberta Indigenous Opportunities Corporation. Alberta government felt there wasn't enough Indigenous involvement of substance in resource developments, which resulted in one of two things. Either the Indigenous group was so beholden to a joint venture partner or a financier that their actual hold in the deal was so small that they had not much skin in the game. So they had very little, they could get very little support for community backing resource developments if the community didn't have a real stake in it. So Alberta saw that as one problem. The other problem is there was an interest in getting Indigenous involvement in some of these large capital projects, but the Indigenous groups didn't have the wealth I talked about earlier to leverage real investment. So Alberta did something very innovative, and I was very supportive of when I heard the concept. They asked me if I wanted to be on the board. I said I've been on too many Crown Corp boards because I've been on 2 Crown Corp boards. So I chose not to, but I was on the Minister's Advisory Committee, and I think they're on the right track. So what they were going to be doing is they put $1 billion aside for loans or loan guarantees, somehow putting equity behind deals that have significant Indigenous involvement, not necessarily, as I talked about earlier, the 51% ownership, but meaningful interest and carried interest or stake in the outcome of the project, such that the leverage from Alberta allows the Indigenous investment to be done, not that it replaces Indigenous investment. So if the Indigenous group has some capital but not enough, and there's a need to bridge their interest so that the partners make them a meaningful partner, the Alberta Indigenous Opportunities Corporation will do that. And not only will it put some capital into the deal, it will also help with the capacity. So it will ensure that there's good, strong, private equity-like capacity that's put behind the First Nations interest in those developments. And I think what Alberta is doing is really putting their money where their mouth is. And I think they understand that having Indigenous meaningful interest in the resource developments will, so there's been some comments in the press about, this is sort of buying the Indigenous support of resource development. I don't see it like that at all. I think there is support for these things, but I think this makes the support meaningful and returns some interest back to the Indigenous group. So I think what they're doing is quite innovative.
And there's interesting things happening in Alberta. I'm actually in Alberta in Edmonton on Thursday. John, I think you're there. As the Alberta government starts thinking through getting back into the P3 space and other innovations, wearing another hat. So there's a commonality here with regard to the challenges of financing. And you've been studying it. You've been working on it for quite a while through the First Nations Bank. And John, you're not obviously not entirely focused on Indigenous, but you're conscious of Indigenous opportunities and the role that you play. I used to call it the bridge over troubled waters. You've got another line for it, right? And it's a useful one in understanding where the CIB fits into this context. But I want to turn to Jake. Jake Dockstater is VP Business Development at Bridging Finance, and there's, right, Bridging Finance. So there's the same point, right? The challenge of getting commercial loans in this space, and the name says pretty much everything. So tell people here about the role you've been playing, the organization, the amount of financing loans, because we were talking about that the other day. It was quite interesting, and in particular the Indigenous Impact Fund.
Absolutely. So Bridging Finance is a private debt provider here in Toronto. We have offices in Winnipeg and Vancouver as well, but this is the head office. And really we mainly specialize in business-to-business loans, so commercial lending. But when the fund reached a certain size, our CEO, David Sharp, who's a member of the Mohawks of Bay Quinte, said that we're going to start doing Indigenous lending as well. And that was not exactly a popular concept with our investors at that time, but it's certainly proved to be very successful and something that they want to be more involved in. So we've grown from a family office of $30 million to a fund with $1.7 billion under management in a little bit over 6 years. And through the Indigenous lending, there was definitely a demand and an interest in an Indigenous-specific fund. So last spring, I believe, we launched the Indigenous Impact Fund at Bridging Finance, which is just for Indigenous lending. That's not to say we don't lend out of the main pool as well. I think to date we've lent just over $400 million to First Nations communities for various economic activities since we started engaging in those transactions. Our role really is access to capital, providing the access to capital. We are short-term debt. We're looking at 8 months to kind of 2 years, 3 years kind of as a maximum. And we're that first money, that first step to get things up and running. So providing that initial capital to get things set up, purchase equipment, so they can bid on service contracts perhaps, or if there's an opportunity that's time sensitive, we're much faster than a traditional lender, especially with First Nations. Getting capital out to communities, and that we've moved within a month from introduction to deploying funds. And that's really where we sort of specialize, fast, flexible capital. And that's sort of a need that we found has not really been met so far. And certainly we need to partner with organizations like the CIB, CCAB to find opportunities and also to provide that long-term capital once it's up and running. So always looking for other partners to work with in the space, because we found that we like to provide them with a complete solution and a sort of a handoff to the long-term capital. Make sure that they have that low cost going forward, so not stuck with our money.
That's great. So let me, we've got a fair bit of time for you, I think, but let me seed the conversation a little bit and just simply off the top. We've heard a number of examples of non-traditional projects that have actually been quite successful. The previous speakers were talking about Churchill, in which the federal government, Churchill Rail, the feds did play a significant role. The former clerk of the Privy Council sort of stick-handled a lot of it with Fairfax, among other things. Wate as a non-traditional project. TMX potentially, your reference, Keith, the Alberta investment. Where does this point the country broadly with regard to how to do infrastructure differently? And are we finally turning the corner on this? I was saying earlier, and you all know this, I think, from spending time in the Arctic, it is striking the need. And it is striking the need in the context, frankly, of other Arctic communities. We have friends here from Greenland. Their infrastructure is more advanced than ours. There's no question about that if you compare Nuuk to Iqaluit, for example. Do we have a head of steam in terms of non-traditional infrastructure investment truly right now?
Strict at me?
Yeah, sure, whatever.
In the infrastructure space, I'm not certain that I'm most qualified to talk on this. Definitely we're happy to provide any support to communities in the area, but really we focus on community-driven projects. So if a nearby community has the opportunity to participate in one of these large-scale projects, we're happy to provide the capital so they're able to make that equity investment.
I think that you just named a number of them, OPG, the Lower Matagami Dam Project being another. I think there's a series of really interesting, significant, maybe not the 51% ownership, because I agree that can become a bit of a facade if not managed properly. I think there's been a number of really interesting large projects. What I'm curious, I'd like to see is first, obviously, those increase. I think that we have some real examples. What they serve as to me is examples of how it can be done well. And you have a number of examples, maybe not perfect, certainly, but many examples of how it can work. You also, what I'd also like to see, so I'd like to see more of those examples in the north especially, but across the country, but then also throughout the supply chains of major companies. So companies that are already doing this, how do you make sure that the businesses, maybe you couldn't, the gentleman referring to C-SPAN and Irving identified 2 projects. Maybe there's no Indigenous businesses able to produce those, which I can tell you there's not from firsthand experience, but how do you make sure that once you've sort of secured those large projects within the supply chains, you're going to Indigenous private firms, Indigenous community-owned firms, so that even in a project where you don't see a majority or minority equity position, investment comes with some enforceable metrics or stipulations around Indigenous involvement in projects. I think that's the other side to this discussion.
And didn't the Liberal government make a pledge with regard to procurement, right?
They did, based on our research, actually. They're very proud of that.
Okay, I didn't set that up. I've forgotten the percentage.
Right, so the Liberal government, we would mention CCAB, the Procurement Strategy for Aboriginal Peoples. It's 30 years old, so this is a bipartisan sort of thing, and it has achieved less than 1% federal spend a year in those 30 years. Suncor, as an example, does roughly 7% of its spend, which is $700 million a year, on Indigenous companies. So the Liberal Party and is now the federal Liberals have set a target of 5% federal spend on Indigenous businesses which is aligned to the population, which I think is a fantastic thing, and we're really excited to help them get to.
John, Keith, do those projects represent progress, and do we have increasingly the balance right? I don't know how you judge that. Maybe it's as hard as judging the gap. The infrastructure bank has $35 billion, as you were saying, John, on an overall federal spend of 180. The 180 is by and large going to be done the old way, and there is a heavy political thumb on that. Is that the right balance, 20%? And do others,
Look, I'm not sure if that's the right balance. To me, honestly, that's a bit of a secondary question. I think we need to do a better job at the things that we have and that are already defined. In our mandate, in all of the mandates. And one of the things that has struck me since I've been involved with the bank in the last year is it became very quickly apparent that what we could use a whole lot more of that would benefit these projects and the people that would benefit from them is more coordination at the federal level. You have this fractured base of programs. Some of them are grants. We don't do grants, but somebody else does. And I often have conversations with municipalities or smaller groups where they say, well, that's really interesting. We may come back to you, but we're going to hold out right now for a grant. Because we don't have to pay back the grant. And that means another year or 2 years, and that's not breaking the dependency on government grants to get infrastructure built. That really was the reason for our creation. And so I think more effort on a coordination of federal programs, where they're directed, narrowing of the number, specifying which ones for different types of infrastructure. It was mentioned on the last panel, some of these projects are so expensive and so remote, there's not a business case in the world, no matter how much subsidy you give, no matter how much subsidy that's repayable you give them, that's going to work. Why don't we say all of those that are capable of involving that kind of investment in one bucket and all the other ones that aren't, sort of trying to do more of that type of thinking. And I think that I think is a really good first start, because there are lots of conversations just like the one going on in this room all across the country, Indigenous groups and otherwise, that are having the same conversation. How do we do this is the question I hear more often. Why would we use you? Who else is out there?
Well, and the point about traditional government spending versus the role you're playing is an interesting one, because the capacity at the municipal level and in the indigenous communities often, not always, is a little challenged. Keith, to that point, and then maybe we'll open it up to all of you.
So I was on the public sector pension board for 10 years. We were doing the infrastructure, setting up the infrastructure fund there. And we invested everywhere in the world except Canada, because there was no investable infrastructure in Canada. So I think we've come light years ahead of that, but that just could be 1 or 2 deals, right? It's not like there's private infrastructure everywhere. So I think we're doing better. In the north, I agree with your point completely. It's going to take a coordination of federal government effort, because you go to the whatever their new name is, INAC, whatever, they change it regularly to keep First Nations confused. But you go to one department and you say, like, this is a deal we can really finance and speed up the solution and lower the cost for the government. And people who are purely in programming and annual appropriations and 5-year limits on commitment just cannot see how a 10-year spreadsheet works. They can't even agree to the year 2, and they'll never agree to anything more than 5. And you can show all the return in the world, but you just can't get their heads around. So it's going to take a coordination and effort, because I think a lot of the investments in the north are not easily the stuff that's going to have a real commercial return.
Right.
It's going to be stuff that is a social investment, but we're putting a lot of money into some of these areas now. We're just not looking at it holistically as to how we can finance it better. Even housing on First Nations, for example. We did a whole project with First Nations in Saskatchewan where there's a huge housing backlog, and it's causing health issues and education success is low and all this kind of stuff. And you proved a story whereby investment of some commitment of housing dollars that you could bring back to 0.0 through structured finance would save the government a lot of money. But nobody could get their head around the fact that they'd have to commit beyond the 5-year appropriations, and it just died. And I think there was huge returns that Canada would have experienced from that kind of financing.
We asked some of those questions, and we found that actually over 3/4, 76% of Indigenous communities could do that work themselves if financing were made available. So yeah.
Jessica, you got a question?
Yeah, I do. I'd like to, if you can kind of delve a little bit more into, because you have a mandate and you fulfill your mandate, and I'm just wondering if there's any sort of two-way discussion that goes on. And one of the things that came out of the Senate, they a pretty comprehensive Arctic report, and they had several recommendations. And one of them was that basically Canada should take a lead at the Arctic level to create, to look into working with the other countries, Arctic countries on creating an Arctic infrastructure bank. And then they came back and said also, though, that here in Canada we need to have an Arctic infrastructure bank. I feel that's a little bit redundant given we have already a Canadian infrastructure bank. But given the amount of attention and time that the North requires to try to wrap our heads around this and actually make it a success, do you see the benefit or the value in having a specific desk, a northern desk within the CIB solely dedicated to only doing work on the north, so those other projects that have so much political capital and that are so demanding can actually be done in simultaneous fashion with a group of other people who are working on these issues and sorting these more longer term things out. And I'm just wondering also then, do you have a conversation that feeds back up and says, this is what people are saying and this is what is of interest, or do you just only take the mandate and go with it? And especially because the bank itself is under a period of figuring itself out and its own identity.
So I'm trying to, as I'm listening to you speak, I'm trying to figure out how to answer that without getting myself into trouble.
You're hiring the first person right now.
Yeah.
So that's the first step.
I mean, I'll answer it this way. There is lots of focus on the North and Northern infrastructure. So do I think we need a focused desk on the North? The answer to me is a very simple no. We have expertise, capability, money, structuring expertise and experience. We can do all of that now, and we're looking for those projects. It's been difficult to find the right projects once you apply the rest of the criteria to our mandate. So if I'll answer a slightly different question. If there's value to having a separate organization or a separate desk with different criteria than the bank has, that's maybe a different discussion. I think we haven't started to really take advantage of what we do have to offer now. And we need to engage more. One of the things I haven't mentioned, so we have this $35 billion to invest, we also have an advisory capability. And the advisory capability we have is at early stage to work with you as partners and look at your project to say, is this the type of thing that could work? And if so, what would need to be done? We don't displace the traditional Big Four advisors of the world, but we found the organizations with whom we've done advisory work are very appreciative of the fact that we don't have an ulterior motive. We're free. We have your best interest in mind in getting the infrastructure built. And we will steer you in the right direction in such a way that the project is structured to invite private capital. If you go too far down the road, it's very difficult to change horses at that point. So we get in early, help you structure it that way that might invite our participation along with private capital. And so we're happy to engage at early stages to do that. I think we should work, before we start to create other organizations, I just finished saying there's too many organizations doing too many different things. Before we do that, I think we should do everything we can to figure out whether we can accomplish the great things and the important things that are necessary within the walls of what we've already built. We're just scratching the surface, in other words.
So I'll agree with you wholeheartedly.
Thank you.
I think we create too many special units to do things differently for First Nations or differently for the North. And I think sometimes that just frankly screws it up. Because there's a way to finance deals. And just because it's in the north, you have to understand the issues that go in. You have to get the right data to input. But to say that you need to create a special unit only to structure financing for the north is going to create a one-off, and it's going to be done differently, and somebody's going to, just mess it up. And that's been, the federal government has done that. Apologies to everybody who works for the federal government. Federal government has done that over and over and over again. They've created another institution that's lending to First Nations now that doesn't do any underwriting and is lending very long term with very little principal repayment, not creating any wealth, creating huge interest rate risks. And that was sort of a special program for First Nations, and it ignored all the premise of how you lend money. And it's just going to put the First Nations more at risk. It's getting a lot of money out, but whether the money's good and sustainable, that's really the issue. So I agree with you. I don't think creating another vehicle only for the north, we'd lose all the talent too. If you have all the talent and infrastructure, why would the north have to recruit different talent for the infrastructure?
I think the CIB was very deliberately not set up so that there were quotas by territory and province, the way all other government funding on infrastructure. Basically, Ontario gets a certain amount based on base plus per capita, and every other province and territory does as well. There was discussion about that with the CIB, and it was very deliberately decided not. It was on the basis of effectiveness. But at the same time, the language around the CIB emphasized the North and Indigenous communities. Mead, you had a question.
Yeah. I had actually two questions. First off, which of your institutions are likely to invest in a project PFID? And I guess I've seen a lot of pre-final investment decision where the gap is not really, can you raise equity for a new power plant or a new pipeline or any kind of particular piece of infrastructure, but it's kind of the upfront uncertain costs of the engineering, the permitting, and land acquisition, that sort of thing. And my second question is to you at the Canadian Infrastructure Bank is, do you do any international cooperation with OPIC or the new DFC in the United States or JBIC in Japan or the others where it's maybe infrastructure on a Canadian port that is helping make something work in an Asian country?
Yeah, I'll answer the second question first. No, we are focused on building greenfield new infrastructure in Canada, full stop. So that's our remit. Do we have discussions with some of those to learn best practices and share best practices? Of course, but that's our focus. On the development piece, it's an interesting question. We get asked that a lot. We get asked, we have this great project, but we need studies done and we don't have any money. Where, can you help us with the development? Generally, we don't do that. We are doing it with Via Rail, with federal assets, because it's the federal family, it's government to government, and they have asked us specifically, the federal government, has asked specifically to do that. But you can imagine the lineup outside our door if we start to fund studies for every potential infrastructure project across the country. Now, even though I'm sure you see that might be a problem for us, it's still frustrating because there's no source of funds for those projects that are real, no apparent source of funds. There are different places in government where you could apply for that kind of funding. I'm certainly not an expert in where all those places are, but I know that there are different parts of government where you can get that kind of money.
Around the corner. Oh. Yeah, Jake. Yeah.
I'm just going to say that Bridging Finance is happy to participate in projects PFID. We do have responsibility to our private investors, so we have to have some security or collateral there, but we are happy to participate in a project at early stages. Thank you.
As a not-for-profit, we are not.
We're a commercial lender. We would not typically. We do some of that with Indigenous groups, but they usually put up other sources of revenue to back that.
So then a question to the board. I have 3 projects I'm working on combined together. So one's wind, one's solar, and one's a transmission line to the United States, and then bring back a broadband fee. So first you, John, I think I've hit 1, 2, 3 of your categories. Proposal driven? Like you read a proposal for that kind of?
Yeah, no, let me be clear about that. That's one of the beauties. There's no application process, there's no application window. You have now met me, you call me, we talk about it, that's our process. So you should feel free to approach anybody that works at the bank. We like to conduct ourselves like a commercial lender in terms of being approached. There's, as I say, no windows or forms. Of course, we have processes back of house, but as far as engaging with us, give us a shout and we can chat.
Okay, then I guess the second part of that is then you're going to get our proposal, and you have federal government criteria that's going to have to fall through or fall under. How much validity or level, how much do you have to do that? Because we have an old saying is you take a good First Nation rounded project and then put it in a federal box. Boy, it turns out to be a federal project that doesn't work in the communities. Yeah. So how much restriction are they putting on you as the infrastructure bank to actually get the projects out there, I guess?
I think it's those criteria that I already articulated, honestly, and I don't think there's different criteria for different types of projects. If it's in the public interest and anything that's a high priority project for a federal, provincial, territorial, municipal, Indigenous group is considered in the public interest in those 4 categories. They have to be not financeable. I mean, some of the renewable projects are challenging because there's an established model in the private sector for financing those. If you have a long-term PPA or an offtake agreement, that's financeable. And so there's no need for us to get involved. In fact, we can be helpful if you're having trouble trying to help you and steer you to people who we know will finance it. And we've done that as well, saying this isn't for us, but you should call these 3 people. And we've done that before. But generally, it's the same criteria. We can give you a very quick read on whether or not we think it's something that we can work with. And then we take it from there. And then we get a signal check we call it a signal check from the federal government to make sure that they agree it is in the public interest and that it's not contrary to any policy of the federal government. For instance, if you came to us with a coal mine project, that's contrary to the policy of the federal government in terms of going green, that kind of signal check, to use the most obvious example.
No coal.
No coal.
Last question? Jim?
Just on that particular vein, touching a bit on Jess's question, a water project. So coming from Nunavut, for example, Nunavut's water infrastructure and across First Nations across Canada have this particular issue where a lot of federal investment has gone into previous projects or projects in the past. Would you be willing to consider, I don't know what your comfort level would be in terms of an investment percentage, in terms of being able to deal with a rehaul of Nunavut's water infrastructure, for example, wastewater and wastewater, for example?
Yeah. So water, wastewater is right in our wheelhouse. We have one announced a project in a small municipality called Mapleton, Ontario. It's a $20 million investment. Generally, we don't go that small. I haven't talked about size yet, but if it's a one-off project, we don't like to draw any lines in the sand because we're kind of new at that, and a great and meaningful and impactful project we'll always look at. But if we can't write a $100 million check, it's difficult to spend $35 billion. So that means there's going to be a multiple of that, 2 or 3 times that in terms of the overall capital cost. There are certain sectors, though, we're trying to be sensitive and responsive to important infrastructure. Broadband and wastewater in particular, we know are 2 sectors where they lend themselves to smaller projects. And so we've developed a program called Standardized Investments for Scalability, where we'll do $20 million projects, but only if we think that we'll develop a standard term sheet and so on, they're scalable, so we can replicate that 20, 30, 40 times across the country. And with water, wastewater, we think we can. And we can be patient. They'll build the plant, we'll take ramp-up risk. There has to be private sector involvement in it in terms of money, but the two foundational conditions laid down by the council in Mapleton were that the water infrastructure is owned and always will be owned by the township, so no privatization or transfer of water, and that they retain the right to set the rates. And so there's a sophisticated structure that's being worked on. They're in procurement right now. They've gotten 3 very, very good bids. There's a sophisticated structure for making sure that the private investors putting in equity are comfortable with that, all of that, and that the town gets its baseline needs met as well. And so that's a long way of saying we would, water, wastewater is right down the fairway, as they say, for us.
A follow-up on that. Would Indigenous organizations or development corporations be able to own the actual infrastructure?
Sure. Yeah. I mean, Indigenous organizations qualify as public sponsors, as per the way we were set up. But here's the rub. Here's the situation that came up the other day, though. If Indigenous, I got approached about a project where it was sponsored by an Indigenous organization in one of our asset classes. Perfect. But the proposed structure was we would put in 50% and the Indigenous organization owner would put in 50%. No private capital in that deal. And so they said, well, can't the Indigenous organization be private capital? And I said, yes, it can, but then it can't be the public sponsor. You can't wear both hats in the same deal. So we need to, but those are all structurable, I'll call them. We can work on those projects to make sure that it works in a way that makes sense for everybody. So the advice I'll give people in the room is, despite what you've heard me say, don't be too quick to self-select. If there's something you think is great, please do call and we can chat about it in more detail.
Great. We're on time. The point of this session was to talk about non-traditional means of financing infrastructure. And I think the panelists have done that and done it in a context of traditional spending, which is sort of an added bonus, I think. So please join me in thanking all four panelists.